Hello, friends. Welcome back to another edition of James's Gems of the Week, the recurring series, the weekly series, in which I, James Stevenson, walk you through all of the tweets on Tesla Twitter that I liked over the past 7 days and explain in my own inimitable fashion why I liked those tweets. Loki, as we can see in the Loki cam here, is snoozing in his dog bed, his big, oversized, comfortable dog bed. So maybe he'll come join me later in the video, or maybe not. Until that time, let's share my desktop. And I have a Loki cam here for you. Let me just move this camera. There, that's going to be better for your audio, for me to be closer to the microphone and still in the frame. We have a Loki cam here between me and the iCannot_enough logo. And, well, I'll go back to full frame for a second. A really unusual thing happened this week. On October the 6th, every Twitter user started glitching and liking their own tweets. So at first they thought that it was only the big accounts, but then it was discovered, no, it was just like a site-wide malfunction where people were liking their own tweets. At about the same time, I think on the same day, that a whole bunch of people lost a lot of followers because there was a bot sweep and clean out happening. So you're going to see a lot more of my own tweets in this week's episode of James's Gems of the Week because of the format. Twitter screwed up my format. What I do is I go to my profile and to my likes, and I scroll down the list, and then I scroll right back up again, and I talk about all the tweets. So I'm not normally in the habit of liking my own tweets. You'll know that if you're a regular viewer of James's Gems of the Week. But this week I'll talk about them. I even went through every one of them and liked and then unliked them and then quit out of the application and restarted it, and they're still there. So we'll talk about them. Let me go back to share desktop. You can see Loki again, and we'll bring up Twitter. All right, so this was the last tweet. Hold on. I have two screens. It was on my other screen. Man, I could have just wasted a whole lot of time making a video about tweets you can't see. So here's a tweet from Sawyer Merritt that we talked about last week. And the next tweet comes from Farzad Mizbahi. But James, the line isn't vertical enough. This is clearly a busted growth story. So a whole lot of people liked this tweet. Let's check out the context and see what's going on here. This was me saying the Tesla growth story continues, and then the chart here, if I can get it all into the frame at one time. Yeah, that's good enough. So these are Tesla's actual deliveries. The time period is a pretty unusual one here. So, Tesla just reported their Q3 2022 numbers. So you might ask the question, how's Tesla doing over the last year that ended in Q3 of 2022? Which answers the question, if Tesla's fiscal year ended at the end of September, what would their fiscal year totals have been? Well, they would have been 1,217,223 deliveries. So your next question is, okay, is that a good number? Is that a bad number? How do I get a feel for the magnitude, the scale? What do I compare that number against to find out if it's any good or not? Well, the logical thing to do would be to compare that against the prior year, same time period. So the 12 trailing months ended Q3 2021, which is this number, 808,239. The year before that, it was 431. The year before that, it was 346, 184, etc., right? So this ought to help anybody understand how the growth story is going for Tesla. I don't think it's over. It's continuing. And Farzad replied that the line isn't vertical enough. How the rival automakers would love to have anything close to a line this vertical on the same chart. If you go find Ford or GM and plot them, you won't even see a positive slope. You will see a negative slope on their line. They are losing total sales year after year after year. I've put out a couple of charts about that over recent days and months. You can go check out. But for now, let's continue the tour. Next tweet came from Chris Pierce at Christmas Pierce on Twitter. Wow, you were 31 cars high out of 365,923. That's 0.00847,173% off. So I like that tweet. For the decimal precision, Dutchy Wiegans didn't like my forecast. He thought it missed by too much. That was sloppy math on the part of my forecast. But yeah, I got closer than I will ever get for sure in the future on Tesla's production number. Now, everybody missed on the deliveries number because nobody expected Tesla to carry so much closing inventory or finishing finished goods ending inventory. But that's good for Tesla's business if it means they're ending the wave because it reduces their total cost per vehicle trying to expedite stuff around the world, and it eases the pressure on the deliveries teams around the world who all work like crazy in the final month of every quarter and don't have as much work to do in the other 2 months, which is kind of a silly way to run an operation. So hopefully we'll see that wave unwind completely over coming years and months, and Tesla will just prioritize the orders in ways that make sense for maximizing profitability. Okay. Next tweet from Tesla Herbert. Unbelievable how accurate James is with his projections. Gives me tremendous confidence with his forecast for Tesla. You earn the crown, King James. So he's retweeting Matthias Fons at Holga Donska 9 on Twitter. Tesla Q3 P&D analyst estimates. Piper Sandler was the closest on deliveries, and they were high by 2.96%. And then, yeah, I got very lucky. You have to get very, very lucky to get anywhere near that close, and I did for sure. Next, a tweet from Rosepetal236. 50.6% growth year over year. What's this talking about? Well, it's just a comment on that chart we just looked at. If you take this number and you divide it by this number and you subtract 1, you get 50.6% year over year growth. People are talking about how Tesla is struggling to achieve 50% year over year growth. And if you just look at the last 12 months and the 12 months that came before that and do the math, Tesla is doing just over 50% growth, even though Q2 of 2022 had all those problems with the Shanghai lockdowns especially. All right, here's a tweet from Martin Vieca. 366K produced, 344K delivered. Delivery peaks are becoming more and more challenging, so we began transitioning to a more even regional mix in Q3. I made a video about this, but he is talking about here that at the end of the third month of every quarter, everybody everywhere is trying to scramble to deliver cars. So they've got, people who should not be delivering cars, trying to get them out. People who work in solar or whatever, right? So it makes more sense to spread that out more evenly, and that's what Tesla says they are doing. Did I reply here somewhere? A lot of good tweets here, probably. I thought I replied to Martin. Maybe we'll see it later. I like to tweet from Elon Musk. Customer experience suffers when there is an end-of-quarter rush. Steady as she goes is the right move. Who's Elon replying to here? Well, it's friend of the show, Holmar's Catalog, at Holmar's blog. Let's read this whole thing. Tesla is so dumb. They already so many great affordable humanoid robots on the market that are much better than theirs. Like there was the Yeah, so there was criticism from people that Boston Dynamics makes a better robot. Okay, do you know anybody who owns one? What can it do? Do they have any chores, around the house that they can use that Boston Dynamics robot to do for them? Do they have a factory where they can get that Boston Dynamics robot to help make stuff? No. So what Tesla's doing is impossible, and it's already been done before. This is the criticism that Elon Musk so often gets. Hey, Elon, you can't build tunnels to solve traffic problems. That's impossible. Plus, it's already been done before. People have been building tunnels for hundreds of years. Or electric cars. Hey, the Baker Electric in 1922 was best-selling car in New York City. And you can still find some. Jay Leno has one. You can go find that video if you want to see that thing driving around. It still works. They were making electric vehicles 100 years ago, literally. Yeah, they told him it's impossible to make an electric car company, and it's already been done. So it's possible to hold in your mind both of those concepts simultaneously without conflict. If you hate Tesla enough, or if you just distrust Elon Musk enough. It's funny reading simultaneous criticism that it's already been done, but also it's impossible. Yup, I hear it all the time with respect to your products. Elon, congrats to you and the Tesla team on another record-breaking quarter. Could you expand on the challenges with vehicle transport mentioned in today's production and deliveries report? Some color would be helpful. And Elon said, smoothing out crazy end-of-quarter delivery wave to reduce expedite costs and relieve stress on Tesla team, aiming for steadier deliveries intra-quarter. Elon said it a lot better than I just said it to you. That makes sense. The end-of-quarter delivery wave is bad for the team, bad for customers, and also not cost-effective. A more steady mix of deliveries throughout the quarter would be great. I'm sure Berlin and Austin will make that easier as they ramp. And then here's that tweet that I read first. And then here's that video that I mentioned. So if you want to go into more depth on this topic, I made a video called What Happened with Tesla Q3 Deliveries, where I explain exactly what we just saw. Okay, another tweet from Elon that I liked, but between now and then, we do actually need to work hard. This thread began with a tweet from Ross Gerber at Gerber Kawasaki on Twitter. Hey, Elon Musk, love to discuss the long-term global economic implications of Optimus and how investors should view Tesla moving forward. Elon says, I don't care about boosting the stock, but the economic implications are obvious. Owen Sparks replied, we are entering an age of abundance. No longer will you have to work a job you don't care about to earn a living. Do what you love to do. And Elon said, but between now and then, we do actually need to work hard. So I liked that tweet. The end of work is not here yet. We have a lot of work to do between now and then. Next tweet I liked from Gary Black, which now has 1,420 likes. Tesla investors should remember 3 near-term catalysts that can help shares recover. 1. Elon likely to settle with Twitter before trial. Lifts cloud from Tesla shares. Well, that was a good thought on October the 3rd. Tesla third quarter earnings should beat reduced Wall Street estimates following volume miss. What Gary means is, hey, the deliveries number came in lower, and these Wall Street analyst spreadsheets are not like my spreadsheet. They're very simple. They just overwrite their deliveries number, and it kicks out a lower earnings number, and that's it. And, they take an early lunch and take a long lunch and then don't come back after lunch. And 3, S&P IG credit upgrade after 3Q earnings. So Gary was right on the first part of this and wrong on the after part. They already did this upgrade. So S&P did theirs, and then Moody's is the holdout. We'll see how long it takes them to upgrade Tesla to investment grade. And then once that one has come through and there's consensus between S&P and Moody's that Tesla is investment grade, it should get added to a bunch of funds that had been turning their nose up at it as a junk-rated stock. as judged by the feckless and hapless S&P and Moody's. All right, Matt Smith tweeted, "So relieved that this Twitter overhang is gone," on October 5th. One of several days recently when Tesla had a really tough day on the stock market. So I like that tweet. Next, a tweet from Renata Konkali. "I have deja vu. Credit at I cannot underscore enough." She's replying to Elon Musk and Stephen Mark Ryan with my Tesla Q logic flowchart that I've been tweeting around since, I think, literally 2018 when I made this. Tesla Q logic flowchart. Pause that and read it if you haven't read that before. Oh, I should click through here and show you the context. Stephen Mark Ryan began the thread. "I noticed a lot of the hate stream media coverage of Elon Musk to proceed with Twitter acquisition is suggesting that the deal could change the outcome of future elections, which implies that allowing currently silenced voices to be heard would change election outcomes." Elon replies, "So they're saying that not buying Twitter is bad, but also buying Twitter is bad." Yeah, that's the kind of logic that the Tesla detractors have been using for many years now. Okay, next tweet from the Short Shorts historian. Maybe we'll see an example. "Hey Dean Shake 1, it's been 3 years. What happened?" Let's bring this up and make it big. How come Tesla Solar only offers 15-year coverage, but if I get Panasonic panels from another installer, they offer 25-year? Want Tesla, but 10 years more on warranty is hard to give up." Dean Shake replied, "Tesla will file for bankruptcy within 2 years. They should go ahead and offer a 100-year warranty." So that tweet was sent on October 6th, 2019, so 3 years ago. Dean Shake guaranteed a stranger on Twitter that Tesla would be filing for bankruptcy within 2 years. The chart tells the rest of that story. Okay, next a tweet from Jack Farrington. "You know what you never hear? As new entrants bring EVs to market, the quote EV market share, end quote, will decline for all existing EV makers, not just for Tesla." Yeah, the more people jump in the pool, the more water is displaced, right? Every time somebody else decides they're gonna make EVs, they enter the EV market and take some of the share, meaning everybody who was already there has less share, right? It's just math. So this is in reply to my video about Who's Hating Hard on Tesla Today, episode 13. When Tesla's EV market share declines, does that mean a demand cliff is coming and Tesla is doomed? Find out in this episode. If you don't want to watch the episode, I'll save you the time and say, no, it doesn't matter what Tesla's EV market share percent is. It matters what Tesla's total market share is, right? There aren't two separate markets, one for EVs and one for combustion engine vehicles. Some people want to trumpet loudly if Tesla's EV market share ever declines, as though that means anything. If you have carefully examined the problem, you will determine, as a thoughtful investor, that it does not matter what Tesla's EV market share is. It matters what Tesla's total market share is. And it's growing every year. Breaking, I have upgraded S&P from my highest junk ratings agency rating to my lowest competent grade ratings agency rating. I tripped myself up over my own tweet. Moody's remains unchanged at my highest junk ratings agency rating. So, I didn't like this tweet, but it got liked because it got sent on October 6th, and everybody liked their own tweets on October 6th. So here's a tweet I sent file footage of 28 delays later. This tweet came out on July 30th, and I didn't like it either. But Twitter decided to like it. Tesla plus Twitter equals Twizzler is what Elon sent on July 30th. So here's 28 delays later with his Tesla Twitter Twizzlers. I thought that was a good tweet to send at the time. I didn't like it, but there it is in my likes. I also sent this tweet. So, can everybody tweet 4 GIFs at one time now, or am I special? And I found out that about half the people who replied could tweet 4 GIFs, and about half the people who replied couldn't. So maybe it depends on which platform you're using. So some of the platforms have it, or if you've upgraded to the latest version of Twitter, maybe. But I found some popcorn GIFs that I thought were a pretty good use of 4 GIFs. So I went about abusing my newfound powers immediately. All right, James Stevenson tweeted, "That's me. Hey, I'm James Stevenson. Hashtag Tesla Q members warned people not to invest in Tesla for many years now because they thought the company was going bankrupt. It is now the world's most successful automaker. Will they give up and move on?" Hat tip to Tesla fan MTL for the show prep. So I went down a long list of replies to a tweet where James Cat asked, "Hey, when will Tesla Q throw in the towel?" So you can check that video out if you want. You get a lot of extra James Stevenson tweets because of that glitch. Update, Mark B. Spiegel and Montana Skeptic have both announced their departures from Twitter. Not because they've been wrong this whole time and are ashamed. Oh no, far from it. Because Elon Musk is buying Twitter. With a tiny fraction of what he made investing in Tesla. Where did Elon get all this money from? From investing in the company that you two numbskulls were advising people to short. You guys were telling people, like literally, Mark B. Spiegel presented at the Case Shorting Conference. He talked for 20 minutes about how the competition was coming and Tesla's growth story was over and they were doomed. And, advised a room full of short sellers that they should be shorting Tesla. And I'm sure some of them did. After seeing his PowerPoint deck with all the slides of announcements that competitors had made about EVs they said they were going to make by 2020. So what's this say? Well, guys, it's been nice hanging out with you here, and Montana Skeptic said it will free up lots of spare time for me, which he's going to use to focus on compelling, obviously relevant discovery in Houthi versus Musk, which is a nicer way of saying the Skabushka case. If you don't remember the Skabushka incident, he was chasing around Tesla employees and harassing them and taking photos of the Fremont factory and trying to mess with the Autonomy Day demo car. So Tesla sued him, and I guess Montana Skeptic picked up Skabushka's side since he's a lawyer. And he's doing some pro bono work to support another member of the Shorty ground force. Good times. What a strange soap opera it's been over the years. Next, a tweet from me. Hey, Elon Musk, is the plan to assign dangerous / boring / repetitive motion tasks at Tesla factories or SpaceX facilities to production release candidate bots, meaning bots that you think are almost good enough to sell, to test and make improvements before being sold to anyone else? And you can probably tell by the like count on this particular tweet that Elon Musk replied, saying simply yes. So I was hoping maybe to get a little bit more information than yes out of Elon Musk, but I'll take what I can get. I think that that makes sense for how you'd want to monitor and adjust. Who knows how quickly Tesla might be able to put a bot on a line to do some job and start collecting data on job performance from that bot. I mean, in the video, they showed the bot walking around watering plants, so it's already doing something useful. Maybe a lot sooner than people think. They could have one of those working on a line doing some task. Probably a repetitive motion task or a dangerous task, right? From the same brain trust who somehow still doesn't know, you can charge an EV using solar panels on the roof of your house. I guess they figure if Elon Musk said it, it must be a lie. I crack myself up with my own tweets. So this is maybe too small for you to read, so I'll just read it to you. Stanfield Cap. How are those Model S boats doing, Mr. Fraudsburgers? Classy. You stay classy, Mark Spiegel. And Montana Skeptic replied, best of all, I guess, these Tesla boats are somehow able to charge their batteries even when the power is out. Well, yeah, dummy. If you have solar panels on your roof and a power wall in your garage, you can still charge your EV when the power is out. Oh yeah, and Machine Planet down here, this is Paul Dezan, curator of the Tesla Q Blacklist, saying, only if you check the diesel-electric option box. And then another longtime Tesla hater down here, Bonaire, at Bonaire Volt. Hydroelectric power, of course. So Bonaire thinks maybe a turbine hooked up to a waterfall is what you need to have. They seem like they have more than two brain cells to rub together until you read a thread like that. All right, so here's that same tweet we saw earlier. Next, a tweet from me that we saw earlier that I didn't like, but there it is. 500-mile range and super fun to drive, Elon said in reply to himself, announcing excited to announce start of production of Tesla semi-truck with deliveries to Pepsi on December 1st. So there's the Tesla Semi. Deliveries beginning December 1st. So I was happy to see that because I do have in my forecast, and have for a couple of quarters now, I think, 8 Tesla Semis to be produced and delivered in Q4. So hopefully Pepsi will get one or more of those, and my forecast won't be off by very much. Next, a tweet from James Catt, the aforementioned. This, ladies and gents, is called gaining market share. So I've been getting some grief from detractors on Twitter recently over showing a revenue growth chart and then having people say, that's not market share, blah, 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 blah. James doesn't even know what market share is. Well, if you think for a minute about that kind of revenue growth, that kind of scale of revenue growth, and you compare it to what the other automakers have been experiencing for revenue growth, and theirs is far less, guess what? Tesla's gaining revenue share. And unless there's some fundamentally disproportionate revenue per unit, that means you're also gaining unit market share, right? Not EV market share necessarily, but total unit sales share. All right, so what's this chart say? This chart says, so far this year, Q3 2022, beginning in January through September, Tesla's sales are up 47% in the US. US light vehicle sales is what we're talking about. And without exception, every single rival has lost sales year over year. They're all down versus the prior year. Ford by the least, Ford's only down 1%, Honda by the most, Honda's down 38%, but they're all down. So, yeah, this isn't specifically a market share chart, but if you engage your brain and try to think through the implications of what this means Tesla must be taking market share. There can be no other explanation for what this is. All right. The next tweet that I liked came from Martin Vieca. This might be the one that I replied to. Accidentally came across this gem. Well, I have to feature it as James's Gems of the Week if somebody's going to call it a gem. Remember this one? Published in mid-2019. Folks seem to like EVs a lot more than what was expected 3 years ago. New technologies take longer to come to market than most think, but adoption happens faster than most think. So what's this chart tell us? Top electric car manufacturers in 2025. Now remember what Martin said here. He said this was published in mid-2019. So a little over 3 years ago, what did this publication think the 2025 total EV sales would be by manufacturer? They put out their forecast, and they said Volkswagen would be number one with about 1.4 million sales in 2025. To their surprise, shock, and dismay, perhaps, Tesla is going to deliver about this many vehicles this year, 2022. So 3 years early, Tesla, who they had down here, at delivering, 400,000 vehicles in 2025, growing to 400,000 by 2025. Tesla is already here today, 3 years early, and the rest of these folks are trailing. General Motors is trailing by quite a bit. If you haven't read the news on them, they delivered 26 EVs in Q4 of last year, so they need to pick up the pace, as do all of these automakers. They all need to sell more EVs and less combustion vehicles. If I follow this link through and I scroll down, yeah, I had to drop my chart on it and note that Tesla beat the estimate for 2025 over the 4 quarters that followed its publication in 2019. So here's Q3 of 2019. So here's Q3 of 2020. So this one is the one that shows you the 4 quarters that followed the publication of that chart. Tesla delivered 431,000 vehicles. The year after this chart was published. So pretty amazing stuff there. Next, a tweet from Tasha Keeney at Tasha Ark. Critiques that Optimus's capabilities today are nothing new seem to miss the point that Tesla is uniquely well set up to build a foundation model of how intelligent machines move through physical space and leverage that model for applications outside of autonomous driving. Tasha is pointing out that people are focusing too much on how smoothly the vehicle walks today, and they're missing that this robot can see its surroundings and map the world around it, where, Boston Dynamics robots are pretty good at performing a pre-programmed gymnastics routine. They're not very good at doing anything else, right? So those videos from Boston Dynamics are some programmers who just code in advance every single movement of every single actuator, and they just practice and practice and practice and practice it until that robot appears to be some kind of adept gymnast or performer, when it's really just following a list of commands, right? The Optimus bot is not following a list of commands. It's looking around, observing its surroundings, running Tesla's proprietary internal neural net, determining the occupancy of the space around it, plotting a path through that, and problem solving, right? These are the capabilities that are going to set apart the Tesla bot, along with Tesla's ability to manufacture at scale and at low cost. Something that's useful for doing stuff, right? That's where everybody else has missed. Yeah, Honda had Osimo, who could walk around a stage 20 years ago. Great. Who bought an Osimo and then put it to use doing useful things? Anybody you know? Probably not. So Tesla is going to work on that, make the robot smart and capable, and that process takes time, yes. And it may take Tesla longer than they're announcing that it will take, but they're probably going to keep applying effort to the problem until it's solved, if I understand Elon Musk the way I think I do, the man who lands rockets. There was a SpaceX launch last night, and they had a great shot from the drone ship, which was pointed at the launch site. You could see the booster rocket coming in the whole way. It was pretty cool. And a better, more stable shot of the actual landing of that booster on the drone ship than I've seen before. So check that out if you haven't seen it. Next, a tweet from Elon Musk. Can't wait to see this beast in action. This is talking about the 9,000-ton Gigapress on its way to the Gigafactory, entered the port of Houston a few days ago, as of October 7th. So Tesla should be receiving this beast anytime now, rumored to be for producing Cybertruck. So that would be pretty cool. You see our Rob Mauer reply here. Cybertruck update soon. Production is expected for next year, as Sawyer Merritt notes here. Still, mid 2023 would be great for Cybertruck. Let me get a drink of my coffee here. All right, so that was those tweets. Next, a tweet from My Tesla Weekend at 4K Podcast. The best analysts looking at production and deliveries sit down for a round table to chitty chat, talk turkey, and share their insights. That's me, Oracle Tim 1, and Brian. So we sat down yesterday for a live broadcast over YouTube. And you can go check that out if you would like to hear. The allusion to best here was that we all did pretty well forecasting Tesla's production numbers in Q3. Next, a tweet from Robert Scoble at Scobleizer. Actually, two tweets from Robert Scoble. Last night I met an electrical engineer who is working at Tesla. He was effusively positive about his employer. He laughed about the Cybertruck being able to float. If Elon Musk says on Twitter, we got to build it. Truth is, the whole thing was designed from the ground up to be water and airtight. So, cool to see those tweets from Robert Scoble. Next tweet from Mayor Thaker. Tesla's cash conversion cycle is impressive. Cash conversion cycle is now negative, which sounds bad, but it's good for your business. If it's cash conversion cycle, constantly running a working capital deficit, which opens a source of very cheap financing that can last a very, very long time. Negative cash conversion cycle is a strong indication of industry dominance. So we'll look at this chart and I'll try and explain to you. Any number above 0 on here is measuring how many days early you need to pay for stuff before you're able to sell it to your customers. And it's not going to make sense, but I'll explain it. Any number below 0 on here is measuring how many days you get paid before you have to pay your suppliers. So I use as my example Walmart. You walk into Walmart and you take an item off the shelf. Let's say it's a 12-pack of cans of Pepsi, right? And you go buy those at the point of sale and Tesla charges your credit card. Walmart charges your credit card. You think about Tesla all day and it's just top of mind. I'm doing a Tesla video right now. All right, so Walmart charges your credit card. Your credit card sends money to Walmart. Walmart has your money for that 12-pack of Pepsi. Walmart's terms with Pepsi could be 210 net 30, and they could have received those cans of Pepsi earlier that week. So what you're doing is giving Walmart the money for your 12-pack of Pepsi before Walmart has paid for the 12-pack of Pepsi that you bought. So what's that do for them? They just have the money until their payment due date arrives when they have to pay their invoice to Pepsi. And when I said 210 net 30, that's just industry standard terms. You can't have longer payment terms than that, 60 days or 90 days. That's talking about you get a 2% discount on the order if you pay it within 10 days, or the total balance is due within 30 days of receipt. So when you when Walmart received that shipment of Pepsi pallets, that started the clock because ownership of that asset transferred from Pepsi to Walmart, and then Walmart, within 30 days of taking ownership of those goods, that cost of goods sold, has to pay Pepsi for the stuff that they bought. But if you've already given Walmart your money later that same week, then they've just got 3 weeks to use that cash to fund their own operation, to invest, to do whatever they want to do with that cash. So that's what a negative cash conversion cycle is. That's good for your business if you can get it. And this one is Tesla's, and Tesla's used to be on the wrong side of zero, and now it's on the right side of zero, even despite the higher ending inventory balance here in Q3. Okay. And the last tweet that I liked this week came from Stephen Mark Ryan. Tesla has a credible chance of delivering or producing exactly 1,420,069 vehicles in 2022. And he is not wrong. And there's 420 likes on this tweet right now, which I hope nobody else likes it. But it's preserved forever in this video. A good tweet from Stephen Mark Ryan, and he's not wrong. Tesla has a shot at delivering exactly this many this year. So with that, I will check back in on Loki's bed. Yep, there he is, quietly snoozing. And with that, I will say, if you've enjoyed today's video, click the like button. If you're not subscribed to my channel, and I know 1/3 of you are not subscribed to my channel, you can go ahead and click on the subscribe button over here. And if you're interested in supporting what I do, you can check out the links in the video description to Patreon. You can join my YouTube channel, or you're welcome to just follow me for free on Twitter and here on YouTube, and I'll see you in the next one.